I will go ahead and introduce Ann Wasko. She has been a market analyst for the Canadian beef industry for over 40 years, presently working for Gateway Livestock based out of Taber, Alberta. She also operates Cattle Trends Inc., a consulting company for cattle market intelligence, and is a regular contributor, if you listen, to realagriculture.com and Real Ag Radio on Sirius satellite radio. She and her husband Barry operate a cow-calf operation in East End, Saskatchewan, and she has fabulous taste in footwear, I must say. Please join me in welcoming Ann Wasko.
Good. Thanks, Melissa. Okay, everybody left. I think Arlene won. Did she win? Okay. Well, those guys are going to miss a really good presentation because how often do we get to talk about these kinds of cattle markets? So I'm excited to be here, excited to talk about what's gone on over the past year, how we got here, or some of the things I'm thinking about, and of course what I think might be lying ahead for 2026. I'm just going to back up. I kind of jumped over that a little bit. So as Melissa said, I've done this for a long time. I'm glad I stuck around this long. This is in my 41 years of being a market analyst. This has been certainly the most exciting, the most profitable for cow-calf producers, and as most of you know, long overdue. We ranch in southwest Saskatchewan. The town's called East End, as Melissa said. Really very much kind of a semi-arid. We're kind of south of Maple Creek, about an hour south. We're about 30 miles from the Montana border. And so this is kind of a picture of the kind of land that when it does rain, it's got a little tinge of green, but we are certainly prone to droughts in that corner of Saskatchewan. So pleased to be here, and there certainly will be time for questions, but if something jumps at you that I'm talking about, just raise your hand and I'll try to address it as we go. So first of all, what happened this past year? Crazy. We saw a new record high in the U.S. Prices hit $224 100 U.S. It's up 20% from 2024. So again, just an amazing run in terms of market. So that was what started us off. In terms of what happened here in Western Canada, and I'm going to talk a lot about U.S. and Canadian because our prices, and Tyler was, referred to this a few times, but our markets respond and react and follow the U.S. market for the most part. So you're going to hear me talk a lot about both markets. But here in Western Canada, fat cattle prices were also up 20%. So that's interesting. U.S. prices were up 20%. We were up 20% as well, and averaged $2.92. I was just on Ontario a couple of weeks ago, and their annual average for 2025 was right on $3 100 Canadian. So good times, good times. But the other thing that happened a lot, especially in the latter part of 25, was lots of volatility. Big moves in the market. The cash market kind of just moved along, but if you're trying to do some pricing or not, lots of volatility. This chart, for example, and it's not right up to date because I sent the presentation in a bit ago, but April 26 fat cattle on the futures market in Chicago. Again, the big run up, the high, the peak there was in October of 2025. And of course, the big drop as we head into November, and I'll talk about what drove some of those responses. And then, of course, we've had a good recovery as we finished off 25 and so far this year in terms of these futures markets. But big swings. You get these big prices, we're going to get big swings. They kind of go hand in hand. So what all happened after this market made its all-time high in terms of where the highs hit for futures prices in Chicago was on October the 16th. What happened to create that big down that we saw happen over the next 6 weeks in the markets, especially in the futures markets? Well, first of all, President Trump comes out and says retail beef prices are too high. Well, there's one thing I learned when I started working for Canfax at CCA. Both Charlie Gracie and Chris Mills lectured me that you never go into a room and try to tell cattle producers that prices are too high. That's a big no-no. So he comes out and says prices are too high. He also suggests that maybe he'll open the Argentina market and bring 4 times the TRQ, tariff rate quota, in from Argentina. And all it takes is some of this talk. Those of us that know the numbers knew that that would not have mattered. The Argentinian market would not have had a big impact. But things in the same week were also happening. There was rumors about the Mexican ag minister showing up in Washington, D.C. to talk about the Mexico border with feeder cattle into the U.S. And I'll explain why that's such a big deal here as we go along. But just those little hiccups and discussions in the marketplace were enough to create some of these big, big swings in the market. He also, at the same time, talked about maybe lowering that Brazilian tariff that he'd put on back in July, that extra 50% tariff, which was added on to the 26%. So Brazil was sitting at 76% tariff rate. And that one has happened. But nevertheless, all of these things were on top of one another. There was lots of chitter-chatter at the same time about USDA and this big report they were going to come out with called Fortify the American Beef Industry. As it ended up, it wasn't that big of a deal. It had some really good things in it, but we didn't know. It was part of what was the unknown. And of course, at the same time of all this happening, we had a U.S. government shutdown. And so what did that do? There wasn't information being released and published and put out to certainly talk about what was going on. So everybody was speculating. Is this going on? Is this happening? Is trade up or down or whatever? So all these things were happening. What was the impact? Really nothing changed on the supply and demand side. That piece was the same. We had the same number of cattle, the same amount of beef, demand was the same. But the worry about those things all changed overnight. So on October the 16th, before those things happened, the live cattle futures market for all of this year, 2026, if you take all the different contract months, it showed an average expectation for this year of 246 US 100. 7 days later, after all this news circulated through the market, it was down to 217 average. So in the matter of 7 days, $30 100 US was taken out of the market. So I'm just trying to illustrate the kind of swings and volatility we can get around rumors, expectations, and this uncertainty, which has been referred to lots already here today. So, have cattle prices peaked for this cycle? I guess we'll kind of go through some things. We know, and Tyler referenced this, the tightest beef supplies are still right in front of us. So are the two going to go hand in hand or not? So let's walk through some of those things. On that whole fundamental side, on the supply side, let's talk about what's going on with the U.S. cow herd first, and then we'll bring it back to Canada. So smaller cow herd last year, we're going to get the new report is going to come out this Friday for the January 1, 2026 numbers, so I'm using my estimate here. But last year, it was the smallest U.S. beef cow herd since 1961. We are expecting, or I am expecting, maybe 100,000 head more cows on the start of this year compared to last. As you can see from the last purple line, which was 25, to this year, 26, I'm not looking for a big change. That's minor. That's minute. So we're going to be just shy of 28 million head of beef cows in the U.S. if that's the case. I think it's important to remember we're talking about numbers of head here, and we produce pounds of beef. That's what consumers eat. And we've become a lot more efficient in terms of how much beef we produce on a per animal unit basis, which is a good news story. But this herd in the U.S. today produces actually 8% more beef than their peak herd in 1975, when they had 45 million beef cows. So I think that's important to remember that this is a great sustainability story in terms of we're producing more with less, but it's also not the same as saying we don't need 45 million beef cows in the U.S. today like we had in 1975. We certainly wouldn't know what to do with all that beef. So again, remember when we talk pounds and number of head, it's pretty important, especially when we talk about historical numbers. So here is that beef production chart for the U.S. The peak for this cattle cycle was, and this was a record beef production in 2022. We got up over 28 billion pounds of beef. You can see in 2025, I don't have a pointer, so I'm just going to walk the last purple line. We were down 1 billion pounds. That's a big drop in 1 year. And this year, the first black line I've got there, that's the forecast that I have for this year, another £500 million drop in the forecast for 2026. You can see I've got the number a little bit bigger in 27. We'll talk about that here as we go, and you'll see why I'm leaning that direction. What's going on in Canada? Cow herd to start off 25 was 3.4 million head. We've really seen it pretty flat over the last few years. It's kind of the phase of the cattle cycle they call consolidation. And I do have a 1% increase plugged in there for January 1, 2026. StatsCan, we won't get that report out till March, so we'll see what that shows. And again, minor change, if anything. I think the biggest question now we'll be watching is, of course, we can't grow cow herd until we keep heifers back. And so that's certainly where we're at right now. And we'll get this number, like I say, on Friday. That line that I've got in for 26 does show that there's a few more heifers expected to be in the inventory this year versus this time last year. So if that's the case, then we're going to mean that we're pulling more heifers out of that fed cattle supply, keeping them in the herd. It actually makes us into smaller supply production numbers in 2026. So that's kind of what we see, and we'll be able to confirm that as we get these numbers out this week. This cycle, again, compared to the cycle that we had in 2014, 15, 16, this one is looking much slower in terms of, yeah, we're going to keep some heifers, but it's not going to be like we did in 2014, 15, or like the Americans did especially, where they really retained a pile of heifers through. So what I've got here in purple is kind of what I'll call my liquidation years, and in yellow I'll call that my expansion years. So that expansion phase that followed the high of the last cycle, when we had the last high in cattle prices, was 2014, 15. That's when the Americans kept a pile of heifers after that, and we saw those heifer numbers take off. The projections here in 26 and 27, nothing even close to what we were seeing for expansion in that cycle. So again, I do think you're going to see some heifer retention, but we're going to call it pretty mild compared to any of the previous cycles, if you will. Same thing in terms of what's going on here in Canada. CanFax does track cattle on feed numbers every month. They've got a report for Alberta and Saskatchewan finishing yards. They basically report how many cattle they're placing, what they're marketing, the sex of the cattle that are being placed, and the weight breakdown of what's being placed. So that's how we're able to kind of generate some of this data, and that we can say in 2025, we actually placed, I get a little bit too far out of the range there, we actually placed 14% fewer heifers than the previous year. So our heifer placements are down, but interestingly enough, our steer placements were up 5%. Okay, you got to scratch your head. So I'll answer that question in a second. How do we place more steers when we're supposed to have a smaller calf crop, right? So that's one thing. In my words on the right-hand side there's another thing we can watch, which is marketing. So the slide that I've got in front of you is placement, but we can also monitor marketings. How many heifers did we market? We're pretty good about counting heifers once they're marketed as through a packing plant, like when they're dead, or when we move them through an international border. So we can count them pretty good, even if we're shipping them south. So in 2025, and we're still waiting for final trade data, but heifer marketing is actually down 14%. And year-to-date steer marketing is up 1%. So one of them is placements, the other one's marketings, but looking at it from both sides, there's no question we are becoming, and Tyler talked, and I'm going to touch on it as well, this whole the impact of feeder cattle imports into Canada is really playing on what we're ending up on feed and the number relationship. But bottom line is, fewer heifers going on feed really leads me to believe that there is some heifer retention going on in Canada. I think there's a good argument that it's regional. You talked about areas that were still really impacted by drought in 2025, especially if you get up into that Peace River region, the area north of Highway 16, right north of Edmonton, north of Lloydminster. Those areas still really running into some dry conditions last year. For a change, where I live in southwest Saskatchewan, we had excellent conditions in 25. The rains came in time, they were timely, and I'm just going to get my water. It must almost be beer time. I think that's a signal. Anyways, okay. To talk a little bit about that weather issue, and I think you're also hearing the American analysts talk the same way, that yeah, there's some heifer retention going on in the U.S., but it sounds and feels really regional, depending a lot to do with moisture conditions. So North American Drought Monitor, as of the end of this year, still showing lots of pockets, especially if you think about where is the American cow herd located, which is kind of right from Texas right up the middle, and especially with where is the cow herd located in Canada, it's basically in Western Canada. So when you look at those issues, there's still certainly some dry areas that are going to be driving some of those decisions whether you're going to retain a heifer or not. The other thing that is playing into the data in terms of these tighter supplies is the overall fed cattle slaughter last year. We saw it down 1.4 million head from 2024. The projection, another 600,000 head drop this year. These are pretty significant drops. If I had been here last year, we were not anticipating a 1.4 million head drop in the fed slaughter in 2025. So it was much bigger than we were anticipating because of that Mexican border in terms of feeder cattle moving into the US, which again, I'll talk about some more. But bottom line is a big drop in 25, another drop in 26. I'm showing that as the bottom for supplies, the tightest supplies. But overall, from 2022 to 2026, we're going to take 3 million head of fed cattle out of the U.S. in terms of the ability for young cattle or fed cattle slaughter. So that's a pretty big decline over 4 years. Tyler mentioned, and I've got a slide in a second, but packing plants looking at this, running with capacity issues, and one packing plant already closing, and another one has cut a shift in Amarillo, Texas. So that many fewer cattle to kill, we're going to start to run into utilization issues in U.S. packing plants. On the cow side in the U.S., we certainly saw a big drop going again back to 2022. Where we were this year, we were down 11% overall, beef and dairy cow slaughter together. Beef slaughter on its own was down 18%, and dairy cow slaughter down 6%. Same thing, a big drop, 2 million head from 2022 to 2026 in terms of how many cows are going to get processed. So it does look like we're making a bottom this year in terms of cow slaughter for this cattle cycle, but it's been a big change. And again, what's driving some of these big imports of lean manufacturing beef to fill this gap or this void in terms of what kind of beef we've got available for consumers to eat. So lots of talk about this new world screwworm. I've done this for a long time, and I had never even heard this word before November of 2024. I didn't know it was a thing, but it's a thing, and it's a big thing in Central America in terms of a disease, an insect that is devastating to the production of, especially in this case, cows. And so once there started to be more cases showing up in Mexico, and especially migrating north, the border, there's been on and off again closures that started back in November of 24, but for all intents and purposes, let's say that the border was really closed from late spring of 2025, and it remains closed today. Why is it a big deal? This chart shows you why it's a big deal. Historically, before 2025, the U.S., depending on the year, would import between 1.2, let's say, and 1.4 million head of feeder cattle annually from Mexico into those southern states, whether for grazing and then obviously for finishing in Texas, Oklahoma, Arizona, feed yards. So those feed yards have really been struggling. Their numbers are way down. Cattle on feed numbers in those states are down considerably because of that lack of the ability to source those Mexican feeder cattle. So it's been a part of their DNA, those southern feedlots, for quite some time. And so when you take that out of the marketplace, it's about 5% of the U.S. slaughter. It's a big deal. It's a big number. And so the market has had to respond or ration. If you're not going to have the cattle there, the price has to go up to ration for why those cattle aren't, or the fact that those cattle aren't there. They're down in Mexico, but they're not in the U.S. system. And so that's why the U.S. market has shot so much higher. And I think we need to give credit where credit's due, because when the border does reopen and these cattle make their way back into the U.S., then this credit or this impact will have to get reversed. So it's an innie and an outie, if you will. But on this case, when you close the market, fed cattle prices, Cattle Facts in the U.S. is estimated it gave about $18 U.S. 100 added to fat cattle prices this past year. And when you take it, and when that border reopens, we're going to have to figure out how that $18 comes back out. It probably doesn't all come back out at the same time. It depends on how the border might reopen, how slow it is, one border crossing at a time, all those kinds of things. And that's why every little rumor around Mexico, when you watch the futures market, it's been crazy, because it is a big deal in terms of how much that impact could be. And even though we're a long ways away from that, because our prices are based on what's happened in the U.S., when their market shoots up and takes off like that, we're going to go for the same ride. It works both ways. So it's a really important thing that we're going to have to keep watching. Tyler talked about this a little bit, so I've got two slides up here. The one on the left is the straight imports of feeder cattle from the U.S. into Canada. And the slide on the right that he showed you is kind of that net slide, because we still export some cattle. I don't know how they pass in the dark at the border crossing, I guess. But this is also a big deal, because prior to 2017, I never talked about feeder cattle imports from the U.S. into Canada. We didn't do it. We exported them feeder cattle. We did not import feeder cattle. But as our Canadian cow herd has gotten smaller, as we've sold off our cow herd for all of the above reasons, you've heard them all, cattle feeders they had this capacity built, especially in Western Canada, and now certainly Ontario is growing in their feeding capacity as well. There's pen space to fill. You've got pen space to fill. The packing plants are there to run them. We've got some big packers in the west. And the drive was there to bring the feeder cattle in to fill those pens, and that still happens today. We do not have all of 2025 data in. That black line is my stab at what the number is going to be. We've got to the end of October right now, and it's about 417,000 head have already come in. And I've still got November and December data to plug in there, and I think November is going to be a pretty big month, just from kind of the stories that we're hearing out there in terms of activity. So we've got some data to get in. We could be nearing 500,000 head of American feeder cattle being fed in Canada. Again, that's unreal. Now, like I say, we got to take out our imports or exports of feeder cattle from Canada to the U.S., but we're still going to be net 370, 380. A big number in terms of how many American feeders are going to be here on feed. And again, it's to fill these feedlots, to run kind of capacity at the feedlot level, and also for our packing plants. So it's been an interesting move, something I have not talked about for previously. Cattle on feed numbers in Alberta and Saskatchewan just came out last week. They were down 1% compared to a year ago, but again, you can see we've been running really close to the 5-year average, even though we've got a calf crop that's substantially smaller than we've ever had before. And we're keeping some heifers back. So how are we filling these pens? Again, just to reiterate what I showed you on the previous chart, certainly a lot of these American feeder cattle are helping to fill these pens. For example, last year, again, final data's not in yet, but my guess is for in Alberta and Saskatchewan, between all the finishing feed yards, we're going to feed about 2.3 million head of cattle in the two provinces that we've got this report to track. And it certainly would have been well under 2 million head if we did not have these feeder cattle imports to place on feed. So just to kind of put it in perspective. Again, you saw, if you were here for Tyler's presentation, you saw him in some slides, he talked about trade. I'm going to start with the U.S. first, just to get an idea of what's going on with their trade here in 2025. As we've seen their production get smaller in 25, they tend to export less, and that's exactly what happened. So their exports are going to be down about 14% when the data's all final in for 2025, which is the kind of that blue line, but the imports certainly up. Again, going to looks like they'll be up about 20% when the dust settles. The biggest increases in importers into the U.S. this year were Australia, Brazil, Uruguay, and Paraguay. In July, I mentioned earlier that Trump put that extra 50% tariff on Brazilian beef, and that's what really shot prices up, right through July. If you look at that chart of prices, really from July to October, it just kept creeping higher and higher all along. Again, what was the impact to cattle on that Brazilian putting that extra 50% tariff on? Cattle Facts in Denver estimates it was about $12 a hundred to fed cattle prices. So even though the Argentinian deal wouldn't have meant much in terms of price impact, the Brazil thing has. Now, I've said earlier, Brazil's back open to the U.S. now. They kind of made amends and everything's fine again. Brazil has a tariff rate quota into the U.S. at 26.4% after so much. They filled their tariff rate quota in the first 6 days of 2026. So now they're back at that tariff rate quota of 26.4%. So that tells you how strong the U.S. market is. If Brazil's going to ship that much beef in 6 days, the first 6 days of this year, to fill that tariff rate quota, that's how much better that the U.S. market is than anywhere else in the world. Again, just showing you that beef does flow to the highest price market when you leave the tariffs alone. Again, I talked earlier about Argentina, and I put this slide together before I knew about, this whole presentation, before I knew about China and Canadian beef. But of course, the U.S. has also been closed out of China for the last couple of years. And what if there was a trade deal between the U.S. and China that included beef, which the Americans would really like, because it is estimated that would benefit their prices, their fed cattle prices, by the tune of $8 to $10 a hundred. So the Chinese market's significant. Tyler talked about our impact, but they do not have, we had that opening and that trade deal done last week. But certainly, I guess I'm putting this on the table because it's that what if as we go through 2026. We didn't know the Mexican feeder thing was going to come at us this time last year. We didn't know Brazil was going to come at us these benefits. Now they're kind of, those two things are probably going to start to come off the platter. What's another positive that might happen as we go through 26? It's hard to say if China ever does get into a place for a deal within the U.S. in terms of beef, but we'll see. On the Canadian side, again, Tyler showed this from a different perspective, but I'm pretty impressed that given where we are in this cattle cycle, that our exports really in 25 are only down 2%. We're not on, like I showed you earlier, the Americans are down 14%. We're only down 2%. So we've got some strong, very strong buyers of Canadian beef, and that's been showing up in terms of, even though we're this phase of the cattle cycle, we're holding this trade together. On the import side, we're just like the Americans. We're short of manufacturing beef. Our imports last year were up 15%. Most of what we import comes in the form of cow beef, manufacturing beef, 85%, 90% lean trim. It's all kind of the same thing, but it's cow beef. It's coming from our lean trim cows. So that's really what we've been short of. Half of what consumers eat in this country is in the form of hamburgers. So that when you're short of hamburgers, it's going to have to come from somewhere else, and that's exactly what happens in these phases of the cattle cycle. And again, Tyler talked about this, 45 to 50% of our market is dependent on trade. We need to get a CUSMA deal done. This uncertainty, remember what, going into April 1st last year, just horrible in terms of, the marketing decisions that were made because we just didn't know if there was going to be a tariff on cattle and beef come April the 1st last year. It was just, people were making decisions because you simply didn't know. And so the sooner we can take some of these unknowns and these uncertainties off the table, especially when it comes to cattle and beef, it would certainly put a big question mark, take a big question mark off the table, because and Tyler went through this pretty clearly in terms of how important that market is to us. And again, this is just beef, then that's why the numbers are a little different than what Tyler showed you. He was talking about cattle and beef together. But just so far in 25, 75% going to the US, 9% to Japan, 7% of our beef exports to Mexico, South Korea, 3%, Vietnam, 2.5%. My point was to more show that those 5 countries make up 96, 97% of our trade. So again, pretty important. Now, it'll be interesting to see, Tyler talked about China. We haven't been there for quite some time before COVID. And so they were a good, solid market for us on a lot of different products. And so it'll be interesting to see how that evolves. The other thing Tyler maybe didn't mention that I thought was really good news last fall was the deal on Canadian beef into Costco, Mexico. And so already starting to see that show up in the Mexican numbers. And this date is only to the end of October, and I think that deal was announced in September. So we're going to see that beef moving into Costco, Mexico, more in the data that comes in the next couple of months. Okay, I've talked a lot about supply. Let's talk about demand for a second. And demand, kind of that warm fuzzy thing, or sometimes it's a cold thing. But this past few years, it's definitely been a warm, fuzzy thing. And it's a little bit hard to talk about because most of it is in the rearview mirror. We don't get the data out until well after the fact. And, you can kind of guess and by golly. But I was guessing by gollying last year, and I said, well, we had such a great year in 2024 for demand. There is absolutely no way we can do any better. And just to clarify, when I'm talking about demand, it's not how much are consumers eating. It is how much are consumers eating and what are they paying for it. So consumption times price, okay? So it's the two things together that gives us a demand index. So let's dive in and talk about, well, first of all, let's talk about price. Both US and Canada are now at record retail prices. December data just came out for the US and it was $9.55 a pound. So you can add one more tick to that black line up there, another new high. Up until now, there's been some professors in the U.S. that have come out with hourly wage numbers with beef prices historically, and we've still been in line. So the wage increases in the U.S. have been keeping up with the price of beef at a ground beef level. So that's been interesting. But I would also hazard a guess that we might be nearing the top of that ratio. Unless wages are going to move some more, now we get beef prices maybe starting to get out of line with that. So I do think there's some signs. I'm a little leery saying this because I said all the same things last year about, I don't know if it can get any better or not. And demand was absolutely amazing in 2025. There's that chart. So that black line, and again, I've left it as black because I've still got some trade data to get in there, but it's a 40-year high for demand in the U.S. and will be similar as well. So it's hard to kind of get your head around, even with the prices where they've been. Consumers in Canada and consumers in the U.S. continue to choose beef. I've got some things listed down the side there in terms of where we sit. I think quality is a big factor. We haven't talked about that, and I've got a chart here in a few, so I won't get too far in this, but Tyler talked a little bit about the environmental piece. I'm going to say that I think we've also done, and I think this is where we can pat ourselves on the back a little bit, we've done a big job in terms of improving the quality of the beef that we're putting in front of consumers today. In terms of the grade of beef, in terms of high quality. So when I talk high quality, I'm talking AAA prime. In the US, that's choice and prime. And we're producing much more of it. I've been around long enough that I remember the days where we got all of those consumer reports back, and there was the 1 in 5 steaks was a poor eating experience. It was tough. It was whatever. And we had to change. Consumers were saying this, no. And that's through a lot of the 90s and 2000s. That's where we were kind of stuck. And so, again, I'll talk about that some more in a second. Ground beef demand's been amazing. So I think, some folks out there that said, okay, these middle meats are too much money, they've traded down to hamburger. The other thing out there is just overall dietary demand is strong. And people are now saying, I want real protein. I don't want that mixed up whatever, we were hearing talk about a few years ago. I want real dietary, whether it's pork, whether it's chicken, whether it's beef, but I don't want the other stuff. The other thing too, I think I'm going to give credit to COVID on this one, it taught people how to cook again at home. So instead of having to wait to go to the restaurant once a year for your high-end steak for your anniversary or whatever, now you can go to a retail store, buy a top-end steak, and cook it at home for half the price. So all of a sudden, people are feeling good about that. What about Traegers? I never used to eat brisket before COVID. Now every time you go out to a family function, it's brisket. So, these are good things, but people have found ways to really make high-end eating experiences with beef, and they're doing it at home. The other talk, and I haven't really seen data on this, but it's certainly a discussion out there with all the folks that are on these GLP-1 diets and whatnot, needing to match it with a high-quality protein, a high nutrient-dense protein. Well, beef fits that bill perfectly. So is that a bit of a trend? Nevertheless, and here's a chart of what I'm projecting. We don't have the data, and we won't have this till May. It's like I say, it's really like looking in the rearview mirror. But my expectation is that we'll have a big jump in demand. And why I'm saying that is that I can work the numbers out for per capita supplies, and we're going to be down about 1%. So consumers ate a little bit less, but retail prices are up 11, 12% so far past year. So when they paid that much more money for a little bit less, it means your demand's up. And again, this has just been an unbelievable year for beef demand in both US and Canada. One of the things we can watch and track is that wholesale price that USDA publishes every day. Last year, the wholesale price, so I've talked about cattle prices were record high in 25. Well, so were wholesale prices. They were up 16%, a new high. And we'll see what happens in 26. We're starting off at a good level, but the question is, do consumers kind of run out of steam if prices move higher again in 2026? Here's that chart I wanted to show you about that quality grade in terms of what are we putting in front of consumers? What are we offering to consumers? This is a chart showing you on an annual basis since the early 1990s when we changed the grading system to measure AAA and prime versus as a percentage of the whole youthful slaughter. Last year, nearly 80% of the cattle that we processed in Canada were AAA or higher. Consumers are saying we want top quality cuts. When we're going to pay big money for middle meats, we want good stuff. This chart tells me we're giving them good stuff. And we've been improving year over year. What are the ways we do it? Of course, you feed the cattle longer. Cattle get bigger. We've got record carcass weights. That's what that blue diamond line is. So, for example, in 1992, our average carcass weight on a steer was 725 pounds nationally. And last year, it was 942 pounds. So we've put more, and it becomes a whole story of genetics, nutrition, health and management. We've got the kind of animal out there now that we can produce these high quality beef cuts that consumers are demanding. So I think, I don't ever hear somebody say, oh, I really, really want to go out for my anniversary dinner and get a chicken breast. You want to go have a good steak, right? I mean, that's what maybe I'm biased a little bit, but certainly that's what I'm going to be voting for. And the other thing I've heard talk about, and I just wanted to share this with you a little bit, over the years, and again, I can do this because I've done this long enough. Over the years, I've often heard from producers, we're just not getting enough of that piece of the pie. It's otherwise the retailer or the packer or somebody, everybody's getting more of that pie, and how do we get more of the pie as a producer? And certainly that's been the case. This chart starts in 2020. You can see what happened during COVID. You were not getting a piece of the pie then, but over time, and especially as we've gone through the past year, it's not a straight line because prices move seasonally, but nevertheless, we saw the bigger piece of the pie going to producers in 2025. Okay, how are we doing here? Okay. All right, let's talk about prices and what I think is going to happen as we go ahead. I guess I have to make some assumptions. To go ahead and talk about prices in 26, I have to make some assumptions. One of the assumptions I'm going to use, and it doesn't matter what, you can pick whatever you think, and that's what it is, because we don't know. But I'm going to make the assumption that Mexican border for feeder cattle to move into the U.S. is going to open in sometime in the first half this year. I don't have anything to weigh on that, yes or no, but you have to put your kind of line in the sand somewhere. So that's my line. If you've got intelligence or believe that border will not reopen, well, then there's 1.5 million head that aren't coming into the U.S. this year, okay? So your forecast would be more bullish than mine. But here's mine. So I think we're in the first half of this year, we're at the tightest fed cattle supplies that we're going to get for this cycle. I'm going to put that range where I've got 2026 somewhere in that, our range for the first half of this year, 220 to 240. Maybe squeak a little higher with some good news that, on demand or something like that. I think for the whole year, though, as we get into the second half of the year, prices will average lower than what we saw in 2025. So I'm going to call the average fed cattle price in the U.S. down 4% from last year. Not a big drop, but I am saying, I guess if you're going to pick an annual basis, I'm going to say probably the annual high was last year. We might get a week or two in here in 26 that beat those numbers, but I don't know if we're going to get the whole year. But again, my whole assumption is around that's what I think is going to happen with the Mexican border. Tyler talked a little bit about this capacity thing, and this is part of that equation as well. When you take a big packer out of the market, you take leverage out. There's still lots of capacity. We're going to get the cattle processed, but you guys know what happens when there's one less guy to the party, right? And that's what this is simply. When you close Lexington plant, which was a large plant, a 5,000 head a day plant, and Tyson's also shutting off one shift at their Amarillo plant, again, because of that Mexican issue. That's a lot of cattle have been lost in the processing forecast for 26. Yes, sustainable beef has opened in North Platte. They started operations last year. They're ramping up as we speak, and so that's helping to offset some of it. And there is another plant coming on stream in the U.S. It's called Producer-Owned Beef. It's in Amarillo, and it's scheduled to open in 2028. So yes, there is some capacity coming on stream, but we've also had a big drop in losing Lexington and half a shift or one shift at Amarillo. On the feeder cattle side, first of all, last year we saw feeder cattle in the U.S. average 27% higher than the previous year. Western Canadian feeder cattle prices were up 30% versus 24. And again, a lot's going to depend on when this border reopens. The news of the reopening, and if it actually happens, it is going to offset and pull feeder cattle prices down. That's just what the numbers are going to be. So be aware of that impact. And I think, you might want to be thinking ahead in terms of if there are some really good opportunities in the first half to price second half deliveries, that might be something to take a look at. So I do think good, strong prices in the first half of this year for feeder cattle. I do think the second half prices will be lower than 2025. And again, just to illustrate how much that Mexican border, and again, this is the March 26 feeder cattle futures, okay, what I've got on here. And you can see my first red star in the middle of that is July of last year. And when that border shut and the Brazil thing happened, look what happened. You added $80 a hundred to U.S. feeder cattle prices from July to that peak in October. And then all the worry came in, that stuff that I talked about at the beginning of the presentation. We took the $80 back out. And now the market's worked its way back up again. But that's the kind of thing, if you're looking at things like cattle price insurance, which is based off of feeder cattle futures, to do some pricing off of, be aware of the kinds of swings that this market can give us. So this is just kind of a be aware of the move slide. On the calf side, last year's steer calf price in the U.S. was 28% higher than 2024. Just in October and November, compared to October and November of 2024, Western Canadian calf price was 50% higher. So I'm just taking the cash cattle. I'm not taking anything that was forward sold or anything, but just an amazing jump that we saw, especially as we got into that October timeframe. So I'm going to use the same scenario. I think, if we're going to see feeder prices stay really strong through the first half of this year, but assuming that that border reopens in the first half, I do think your prices are a little bit lower in 2026. Not a lot lower, still a very good market, but I don't know in that scenario if we can beat what we did in the fall of 25. This was kind of interesting. I wanted to bring this up. Internet sales is a percent of our total auction market volumes. So we've seen over the last number of years, and of course this is whether we're talking about, the teams or the DLMSs or any of the, the video sales that basically all the markets are offering these days, the ability to forward sell cattle in terms of the electronic sales. So this is just the feeder cattle markets. In last year, we saw 21% of the total auction volume sell on these satellite sales. That's the biggest we've ever had. The previous year was in 24, we were 15%. So again, there's another tool in terms of kind of trying to manage and mitigate some of the risk that's out there, looking at pre-selling cattle a little earlier. Now, I know those that sold in May and June maybe weren't really happy with, because the market just kept moving higher and higher and higher, but I think it would be wrong to assume that it's going to be the exactly same thing in 2026. So be aware. Cow price last year, we were up 25%. $215 was our average on Western Canadian D2 cow prices. So again, just an amazing, amazing market. Same with the bread market. This is just fourth quarter bread heifer prices in Western Canada. This is an average on everything. So I know you saw certainly reputation sales, higher than this, but this is an average on everything that sold out there. But again, all-time record highs basically on every single class of cattle. And I've got, as I've kind of said at the beginning, are the price highs in on an annual basis. This chart is showing you that, yes, they were 2025. I still think we've got great prices in 26, but I don't know on an annual average if we beat what we did last year. We're going to need some more kind of out of left field good news like we saw in 2025 help us along. So we'll see if that's the case. So I still look at some good prices even in the next couple of years, even right out to 27 and beyond. This is an important chart I really wanted to talk about. And it starts back in 1990, and again, CanFax put this together, and it talks about how much money is out there in the industry for us to share around. We've got, cow-calf producers, we've got finishers, we've got packers, we've got grasser operations. How much money is there to spread around? And the storyline, well, let me start at the beginning. Through the decade of 1990 to BSE, we had a total of $35 per head amongst all of us to share around. So you might make, here's the different groups. Cow-calf was making, whatever that was, $50 or not even, $10. Then we go through era after BSE. And this chart is so much different than the American chart in terms of they didn't have that decade of losses. For a decade after BSE, the Canadian industry only had negative $72 to spread around. Nobody was having fun during that period of time. That's why we lost as many producers as we did. That's why we lost as much of the cow herd as we did. It was not, again, I don't need to tell anyone here, that was not fun times in this business. But look at what's happened since 2014 to where we sit today. So this past decade plus, all of a sudden there's more money. We've got an average over that decade now of $639 to spread around amongst all of us. Yes, during COVID it was the packer, which is those green lines. I'm not going to argue that, but I'll tell you what, it ain't going to be the packer for the next few years. It's going to be the cowman. And so it needs to be, like I say. So we all make different levels of profitability at different times in the cattle cycle, but the good news is when you've got record retail prices like this, there is more money to go around the system. And I think that's a good news story that we really were fighting through a lot of our time frame. There just simply was no money in the business. That has changed. Okay, I'll kind of wrap up and then we'll take some questions. What are the headwinds? Well, half the time the headwinds are something that we never see. I certainly don't see them. We've still got lots of weather and drought impacting lots of North America. We've talked about CUSMA, how important that is to get done. It's an uncertainty we don't need. Things just really seem to be heating up out there between Trump and Carney these last few days, so we'll see what happens. Foreign animal diseases, Tyler talked about this. I'd never heard of New World Screwworm before November of 24. And here's something that has impacted our markets to the benefit because it closes borders. But you can be this would be a different presentation if you're in Mexico today. It's not very fun in Mexico right now. They've got a closed border because of a foreign animal disease. So those are big deals that you just don't see coming. Cost of production, other than feed. I mean, we look like we've got, there was a record big corn crop in the U.S. We had a huge barley crop in Western Canada. So feed prices right now are certainly not the cattle producers' worry. They're the crop producers' worry. But, we've seen years where it's not like this. But everything else, though, seems to be going up. And that's still an issue. Capital needs, when you're dealing with these kinds of cattle prices, you better have your banker as your friend. I don't know if you were here listening to Tanis at the beginning of this afternoon, but you need to have your banker as your friend, even at these levels. Geopolitical issues, regulatory environment, I've left those on there. Basically, manage what you can. Do what you can to mitigate some of the risks that's out there. I'll talk about opportunities. Just kind of finish off here. We don't all fare the same in the cattle cycle. Some sectors are going to make more money than others. For example, this is the cow-calf producers' time to shine. And look at, have your plan, as Tanis talked about. What are you going to do? Is this a time where you start to, pay down some debt, improve the cow herd in terms of genetics, upgrade equipment, whatever that case might be. But we know this cycle isn't going to last. Somebody else is going to, we will see numbers pick up in the U.S. and we will see cattle prices change again. So use this cycle to your advantage. As far as the cattle feeder is concerned, if you got some cattle feeders in the room, I know you want to throw the towel in. You managed risks last year and all it did, the market just went higher and you're mad because you sold cattle less than the guy that didn't manage his risk. But I don't think 2026 is the year to stop managing risk because you could be buying high and selling a little bit lower. So whatever it might be, whether it's options, whether it's insurance, whether it's forward contracting, I think with this kind of money on the table, we better be protecting equity, minimize your losses. Packers made a lot of money in COVID. They're gonna see probably 5 years of losses would be my guess, 24 to 28, simply because we've pushed wholesale prices about as high as they can. So now the issue is going to be fewer cattle and still strong prices. Retail prices tend to peak after fed cattle prices peak. So it'll be interesting to see if that was the case. Are we, the record prices that we saw at the counter in December, how much higher do they go as we start 2026 out. All right, and I'm just going to finish on this one, especially for those of you that may be going in to visit with cattle feeders in the next little while, and you know when you look at the pen of feeder cattle that you're looking at some big dollars. Maybe don't point this out. I'm not sure those 6 weights you bought are going to pencil. Go feed your chickens. So it's a little testy right now in terms of cattle feeders are going to be looking at some pretty slim margins with these high feeder cattle prices. So with that, Melissa, I've got time for questions, right?
Sure do. Let's just thank Ann for that awesome presentation. Yeah, you probably hear me. I have like a mom voice from hollering at my kids, but yeah, we do have another 15 minutes on the actual agenda, and I mean, Anne was able to get going a little bit early on her presentation, so it's giving us ample time for questions and input here. So, you know, while we have her here, you might as well leverage that. So if you've got questions, comments, please fire away.
Yes.
So you spoke about the USMCA agreement. You spoke about what else you speak about on prices going down. I really get starstruck when but anyways, you did speak about the beef on dairy and how much pounds of that is going to come on board, and with the new incentive for the dairy cows to be on the beef on dairy, that's going to create headwinds when it comes out this spring.
So good question. The question here is about the beef on dairy trend that really kind of started, well, several years ago, but it's kind of really continued to pick up because it's certainly been another outlet for dairy producers in terms of that profitability piece, and on the supply front as well. So Tyler mentioned it's been estimated about 20% of the production, both in the US and Canada, now is what we'll call beef on dairy. In terms of tonnage, it has increased tonnage, but some of that's already in the marketplace because this has been going on for some time now. Those cattle were still out there, but a lot of them would have been kind of in the old days, the veal operations or just the straight Holsteins that we used to feed, whereas that's not the case anymore. So now it's really shifted to this beef on dairy. And I guess when I run the numbers, so we're at, let's call it pretty close to 20%. The question now as we go forward is, can they pull more out of what they've got? In the US, they're suggesting they've already depleted their dairy heifer numbers maybe beyond where they can be right now. They've pulled their numbers down, and so they're going to have to maybe keep a few more back. So I don't know if we bump it a whole bunch more than 20%, to be honest with you, but the bottom line, we're here to talk about price. The bottom line is, what you see in those charts for 2026, that beef on dairy number's already factored in there, okay? So I don't think we're not going to wake up on July 1st and we go, oh my goodness, there's 2 million head more of beef on dairy. They're there. They're on feed. We know they're there. There's, we've got an X number of, we've got 9 million dairy cows in the US. We've got just under 1 million here in Canada, and that's where it sits. Now, if you're going to tell me, well, Ann, we're going to have 20 million dairy cows in the US in a few years, then we got a problem. But I don't see that in the cards. They're making some good money off this beef on dairy, so that's going to carry on for sure. But I don't know if it increases beyond 20%. Markets accounted for 20%. I think you can sleep easy. Up top. Why are the cattle coming north instead of staying in the US? Well, when I talk to the guys that are bringing them north, they say they're buying them cheaper. And it's just that supply story. We have 1.2 million fewer beef cows today than 10 years ago, 15 years ago. That's how much smaller our calf crop is. So those pens are there. If you've been in southern Alberta lately, there's lots of new pen space been built. Those guys are going to fill those pens. And so they're buying the Canadian calves, but they're also they need more, so they're bringing those cattle in from the US. And there's a portion of them that are the beef on dairy as well. Okay.
I've read recently that there's been some structural changes happening in Mexico because of this, and they're building more to keep the cattle there. And perhaps it won't affect it to the extent that it would have been the border had opened 6 months ago. And with that border level that we have, is that better? Can you do that if you want?
Well, yeah, great. I have to repeat that. Great question. So the question's about Mexico and these feeder cattle, and has it kind of changed the structure? What are they doing down there with them? Where are they? Will it be as impactful when the border reopens? A couple things. We know a little bit, we don't know a lot, and so then we start, making some assumptions. The Mexican kill is up only about 2%, so they have killed a few more cattle, but not a lot. They are feeding a few more, and there is a little bit more beef coming into the U.S. from Mexico, so there's a little bit of that going on. But I think back to 2003, when we closed the border and our price collapsed in Canada, what did we do with the cattle? We hit them in every crook and cranny we could until the border opened. And I'm not saying that, is there media in here? Okay, maybe better be careful what I say. I'm not suggesting that, that's the case, but the price is so much better in Texas for a feeder animal than it is in Mexico, that when that border reopens, I do think, maybe not 100%, but they're gonna mostly go back to what they used to do. And I think it just goes back to economics. So today, are they trying to kill a few more cattle and get a little bit more beef moved here and there? Yes. Is it a long-term structural thing? I guess I look in the mirror for Canada. Did we structurally do anything different when the border reopened? We went back to doing business because the money is in the U.S. I don't know, my opinion. There's not a lot of fact in that one, but that's my opinion.
Any other questions?
One right up here.
Oh, I got one here first.
Okay.
You know a little better what it's like out west, but here in Manitoba, the amount of pasture that's been taken out of production the last 5 years, it's not even really viable to rebuild the cow herd. It's going to take a long time. What's it look like out west? And, in the next 3 years, given how much pasture, how much can the herd even grow without dry allowing the cow for 365 days?
No, good question. Just in terms of where does this growth even come from, in terms of, especially when we see the land use change that's occurred, because that land that's gone to crop ain't going back to for the most part, I shouldn't say none because there's some, but for the most part it's not going back to tame grass. So I do think there are, you look at different things happening out there. You mentioned one, and I think it's a little bit more in Western Canada, but there are more cattle feeders putting together cow herds. Maybe in not the most conventional ways that we think when we're ranchers, if you run them on grass and calve them in the spring, and this is how you do it. And I think, so there's some of that gonna go on. And secondly, I'll just make sure, and I tried to make this point when I showed this chart, I don't think there's gonna be a lot of growth in Canada. There's going to be some, just because the money's there right now, and that's, so we can, and we kind of got our numbers a little lower than we needed to. But we've also seen that we can run these feedlots full and these packing plants full with American feeders. So is there going to be a big push to grow the herd drastically? No. We're going to pick some numbers up. We'll keep some heifers here and do those kind of, but the growth that drives the cattle cycle that I talk about comes out of the U.S. So I'm not looking at big growth here in Canada for all of the above reasons. What demographics of the producer, what's gone on with land use, and I mean the money's there today, but we know it doesn't last.
And the risk profile, right?
And the risk. Oh yeah, absolutely.
Yeah, you're a lot more protected, even at $300 an acre profit for a cow herd right now, relative to negative margins are coming in 2026 for these annual crop producers, but their risk profile is so low with their agri-insurance options.
Yeah, no, good point. Good point. So, yeah, just wanted to make sure I clarified that. I'm not looking for big growth. There'll be some heifers kept back, and there's some different things going on out there. Just again, being in Ontario a couple of weeks ago, lots of ethnic growth in some of the cow herd numbers out there. I was kind of surprised to see where the growth in Ontario. And again, it's not big growth, it's some growth, right? So I think we have to think a little differently. Is it going to be the cowboy on the ranges? Maybe not, but a little different way to keep a cow herd. Was there one up there?
My question is in regards to the cow producer. But I'm wondering, do you know how many producers there are in the country now in comparison with maybe say a decade ago? And where do you see that number going in the future?
Well, okay, so the question's about how many producers are there, and I think the best way to put this one out, just to kind of keep it simple, is before BSE to where we are today, we lost 33% of the producers and 25% of the cows. So cow operations have gotten bigger, right? And so we don't have as many producers running small herds. They're bigger herds. But that was the big change in terms of 33% of the producers exited the industry after BSE, in the years after BSE.
So I guess the root of my question is now the time to sell the herd or to hang on?
How old are you? You can't stick around for another cycle? That was my Charlie Gracie's story to me. Oh, he was one of my mentors, rest in peace, Charlie. But he was. This is where you buy low, sell high, right? That's the mantra.
I don't see any hands waving frantically with a question. No? Yeah?
Well, this has been a pleasure, as always, Melissa. I haven't been here for a little while, so thanks for having me on the warmest day that you could find. And but yeah,
It's like Ag Days. Come for the content and stay because your car won't start.
Exactly. Anyways, pleasure to be here. Thanks for having me again, as always.
Thank you for joining us, Sam. We really appreciate it.